In this video trade, we're going to look at the ripple effect of not being prepared by looking at some examples from my own trading. Stay tuned. Hey guys, a warm welcome to you. All right, so preparation is key when trading, and from time to time we are going to slip up and we're going to get caught out. And I want to run through a recent time for me where I wasn't prepared and the lessons that we can all learn from it. So I'm going to look through kind of what's happened, some of the trades from it, but also some of the things that I know I've got to be careful of and every trader should be careful of. So perhaps it's something that we can all take on board and go, right, if we get caught out in this situation, what's the main key lesson from it and what's the main key thing that we don't want to happen? So let me give you a bit of background before I kind of go to the screen and we run through some of the bits. So market had been, whenever you're watching this, it's still applicable whether you're watching this many years ahead or whatever it may be. But the moment in time we have a bull market. Market has been stuck in a range waiting for a Fed announcement that's actually coming out today as I do this video. So the market had a good rep to the upside. It's still not quite all-time highs, but it pulled back a bit and we're still in a longer term bull market, but it's ripped quite a good chunk of move, quite a decent move, 1,000 points on the Dow in a week, about last week. And then it sat in, maybe 2 weeks ago, then it sat in a range, very tight, narrow range, was been limited opportunity. I've placed a few kind of mean reversion trades early on, but the volatility dampened right off. And I'd said to myself, as I don't want to sit in front of the screens all day, every day, when I don't consider there to be opportunity there, I said, right, well, there's the two levels above and below on that range. If we get a volatility breakout one way or the other, then I'll look to get involved because we are waiting for this specific Fed announcement and forgetting about what they're going to say or what they're not going to say, that could cause money to flow in or out of the market. Now I'm looking specifically at the YM or the Dow if you're spread betting, and I'm going to look at the Dow as like a synthetic Dow in a moment. YM would be the futures equivalent contract. So in my mind, I'm like, okay, well, I don't expect anything to happen before the Fed decision today. And I don't really want to either be sucked in during the Fed day. I want to see where it goes, what happens. And Thursday and Friday will be the opportunity going into the end of the week or potential opportunity. So having done that and decided that, I'm always looking to see, what the market's been doing, how we've broken out these ranges. So what happened is yesterday, Mario Draghi had come out and again, it doesn't matter what he said. The point is, ripped the DAX to the upside. Euro US dollar responded, and of course, futures contracts, Dow futures, US futures responded as well because they were in sympathy to the DAX, and obviously they're thinking that the same kind of thing, positive news for the market, is going to happen in the US. So there's a reaction. But again, we don't just go into those details. The point is that then broke the Dow and the S&P out of this range. So when we're opening towards the upper end of this range. So this created trading opportunity. Now, I wasn't prepared for this. I hadn't decided that I was going to sit and watch this market open. I kind of watched it casually on my laptop at the office, and I was there and I realized what was happening. So I took a trade. It was a great entry, but I want to talk about why not being prepared affected this. And also the real key thing, guys, is why not being prepared also can lead to real danger ahead. And I'm aware of that and alerted it and stopped the whole thing from happening. But let's go to the screens anyway and look at exactly what happened. So this is the Dow. We've kind of pushed up. I've got a 15-minute chart here. I'm going to swing it to a 5-minute. So this is what's happened, right? We've kind of moved higher from early in the morning. We've pushed higher. Now we're about to open, and open is 2:30 UK time. So I'm going to draw a horizontal line here. A vertical line here. So 2:30 we opened and off we go. We start to rip to the upside. Now the 1 minute actually shows a little bit of a better picture because I have to say my entry was excellent. I took this trade. I wasn't as prepared as I could be, but I didn't want to miss out on this opportunity that was a volatility breakout. So I know what I'm going to do. I've got my benchmark, I've got my kind of boundaries to work within. And the idea was, if we get some kind of pullback at the open, any pullback, if I can read the turn, the supply demand shift at the lows, I'll take a long. Exactly what happened. I took the long, saw the supply demand shift. It was a couple of ticks off the low. It was a great entry. Give myself a pat on the back for that. But unfortunately, that's all I really did well. So as the market started to rip to the upside, and it ripped pretty quickly, because I wasn't prepared, I ended up scaling out of the position way too early. So 20 ticks, 25 ticks, something like this. When in reality, if you look at the chart, this thing, pushed up 60 ticks without even much of a pullback, pull back a bit. That was the first part of the move. That should have been an add to the position and then ramped on hard. So it's a perfect setup for me. Supply demand imbalance. We're outside of a range. We've got a catalyst. Tick, 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 tick. But not being prepared has cost me thousands by not being ready for this. And who's to blame? It's obviously just me. Now, that's one thing. And so taking out this trade, yes, it's a profitable trade. Yes, it's money in the bank. Nowhere near what it should have been because lack of preparation. I'm scaling out. I haven't really thought about where I'm going to have my target. I haven't really thought about where it wants to go. I just saw that quick move, scaled out of the position, and then sat there. Now, the issue you have now is that, and if we look back to the chart here, you've got to be careful. And this is the point of the video, guys. It's not to say, hey, I missed out on a trade, oh, poor me. It's to say, right, this is where you're tested as a trader. Because once you've done that, you can do one of two things. You can go beat yourself up for not being prepared and go, you know what, one prepared. Why did you not expect this to happen? It could have happened. You were expecting it on Fed day. It happened a day earlier. You should have been ready, everything prepared, have targets, done all your checks, done all the criteria as you would normally do if you were going to trade the day. You could beat yourself up about that. But the trouble you have with that is that when you then take a trade, loser, winner, whatever, it doesn't matter, and then you think, well, the market's ripping off. You then want to almost undo that mistake by taking another trade immediately, because you think, well, if I make a couple of thousand or a couple of hundred, whatever it may be, on the next trade, then I don't have to worry about being unprepared. I've made money, right? Oh, no good, I've made money. Well, that's the danger you have, and that's what I was fully aware of. I thought, listen, no one's immune to it, guys. We're all human beings. We're all like, okay, you can be frustrated for not being ready for this. There's money on the table that you could have had, and just because you weren't ready for it and you were thinking it was going to come the next day, for whatever reason, you didn't get on at the end of it. Now, if you start chasing the market then to try to make up for that error of preparation, you can't ever win. Because number one, what will happen is you either lose money because you're chasing stuff, you think it's going up and you're chasing out of emotion, you're buying on green. And in this example, yeah, you would have got away with it probably because it was just so strong. But most of the time, if you're buying on green, you're sitting through pullbacks, you're coming out, it's a bad situation. So losing. And so you end up getting double frustrated. I wasn't prepared. I took a profit out of it, but then I started to dig a hole and I lost. So that's one thing you can do. Or you end up trading and winning, and then you're cementing, reinforcing the behavior of, well, if I just trade on a whim when the market looks right, I'm going to make money. So you can't win whatever you do. So you have to do in my opinion, this is what you have to do. This is what I did. So, okay, that trade's done. I'm done for the day now. I'm frustrated that I wasn't prepared for the market move. I'm pleased that I caught some of the market move. The entry was very good, and I've kind of in my journal, I've put, listen, your entry's good, that's your edge, it's still there, your edge is reading that entry, very, very good. But the preparation has let you down. It's been small trade, which could have been a much bigger trade. And so not letting that frustration of an error, of a mistake, turn into something bigger. And this is where it kind of blends into more stuff, guys, is that, yes, preparation could be one, but it could be another mistake. And talk about in another video, I'll talk about a couple of losers I took and then feeling that mistake and then wanting to dig a hole. The key here, guys, is not to not make mistakes. Yes, of course, I've now put in my journal, added more things, reinforced things, and said, okay, listen, if you're not going to trade every single day, you need to have some kind of preparation in place so that you can come and bring forward the day you plan trading based on what's happened in Europe or whatever. So some operational thing, fine, you have to learn from the mistake. But the big thing is, if you make an error, is not to make that error turn into something that's really damaging for the account. That's the key, guys, and that's the thing I can't stress enough. And the reason I'm so aggressive with saying this is that I've been there before years ago where I've made errors and then dug holes for myself, sometimes got away with it, sometimes not. It's destructive trading behavior. We're all going to make mistakes, and the goal should be not to eliminate mistakes. Yes, we want to reduce them, of course we do. We're never going to eliminate mistakes. Always something's going to come up when we think, I should have done that, I should have done that, I didn't really follow this, didn't really do that. And if we do make the mistake, the point is then to go, right, recognize you've made the mistake and step away. So in my case, step away. Yes, there's opportunity, but I don't want to be trading from a point of having that in my mind of you made a mistake and you weren't prepared. I want to be always trading from a place of I'm prepared, I'm ready, I've done everything I can do, and I want to take my setups and trades. Now, the argument could be, well, you shouldn't have traded that at all. And yes, there is an argument to say that. The argument is to say, well, if you weren't prepared, why did you even trade? And yes, that's probably, if I'm honest, that's probably got some merit to it. But I decided to take the trade. I wasn't going in a full boat. I was taking it steady. It was the opportunity I believe was there. I took it, and yeah, it turned out to be something. But again, there's probably a lesson from that. Not being prepared and taking something new. You haven't done all your research means, yeah, you start to do what I did, was come out early, because you haven't really got this sentiment there. You haven't really got the conviction of holding it for that further move, which I almost certainly would have done had I planned and said, right, we're breaking out here, volatility breakout. We can expect this in the first 15, this in the first 30, maybe a 180R move early on, maybe then chopping around, pulling back to VWAP. I'll start to have planned the trade out a bit more. So anyway, guys, that's long-winded way of really saying, listen, if you make a mistake, it's not the end of the world. The key is to not allow that mistake to trigger a cascade effect on more errors that are more damaging to your account. A mistake is fine. You walk away from it unharmed. I mean, listen, there's no harm done with this. I've made a bit of profit, going to the next day, learning from it. You just have to leverage on that, whether it's a loss or not. You have to leverage on it and say, yes, okay, there's a mistake. What can I put in place operationally to make sure that I minimize it in future? Done. Now, what can I make sure that, how do I alert myself to any errors so that I don't and dig myself a big hole in the future if I do make a mistake? So making that mistake's fine. Digging the big hole is not. All right, guys, take care. I'll see you in the next one. Bye-bye.